All right. So, good morning and welcome to the weekly call. Um, there's a few things that I wanted to cover. Hey, Demise, did you want to go over something too?
Good morning. Not today. I'm not prepared for today, but I'll be happy to do it another weekend.
Okay. All right. I think Des hit me up and said you wanted to do something. That's cool.
No,
Um,
I think she had inquired with
Gold Rush.
Gold Rush. Yeah, she inquired
oh,
with Gold
so
Rush.
is
Yeah.
Gold Rush? Did Gold Rush want to do something today?
He said he would, but I don't, unless he's got another name on the Zoom call. You know,
Okay.
Gold Rush, are you out there? Because we don't know your real name. I guess not.
Yeah, he's on Singapore time. I don't know. I don't even know what time that is. I got a feeling it's the other side of the world time. So
The other side of the world. Yeah.
yeah. Let me ping him real quick and see if he's
Okay.
alive, chewing on a Big Mac.
All right. So I wanted to hit up a few deals. I wanted my brother to talk about nodes and crypto. So when it comes to crypto, a lot of us might trade crypto on the weekends, like Bitcoin or one of the other coins, Litecoin, Ripple, or whatever. But there are other ways to get involved in the crypto arena. And I know Nick Pass hits on it a lot. He talks about nodes and that sort of thing. But I've hit him up a couple of times, and he hasn't been able to get with us about it. So I know my brother is into the crypto game a lot more than I am. Only thing I've ever done is trade it through the Forex platform. But he actually buys nodes and watches crypto channels and whatnot all day. So I've asked him to basically cover the nodes. I guess basically what a node is, how you can go about getting involved. And for those of you who joined the call a little bit early, we were kind of impromptu talking about it, and he was talking about the risk involved. So I'm gonna go ahead and turn it over to him and let him, I guess, give a brief synopsis of the node game.
Can I just ask a real quick question? How long does this call usually? What do you usually allot for time for this call, Todd?
I don't have an allotment. It used to be about an hour, right? But I record it. So
yeah. No, I'm just asking to let him know if he sees the message, then maybe he could jump in later on or whatever. But typically around an hour.
Right.
Okay.
I mean,
all right, cool.
The last. I mean, since we've grown so much, it's gotten longer than that. With the questions and whatnot. But,
yeah, with topics and stuff. Sure. Okay. Cool.
All right, go ahead, Sean.
Okay. So nodes are essentially, I think a true node basically helps secure the blockchain. But there are different kinds of node projects, and most of them are not true nodes that help secure the blockchain. So most are like DAS or FAS, and basically all that is DAS is DAAS, DeFi as a service, FAS, FAAS, finance as a service. So basically, these are projects where the people behind it, you invest your money and they go yield farm. Basically, they invest in different things. They yield farm. They have different ways of producing a return for you. And if I'm straight up honest with it, there's some Ponzi-nomics. There's a Ponzi-nomic aspect to node projects, because in part, as different people come in, the people that are in it first, they're getting their rewards because the guy that came in after them paid, his 10 tokens or whatever to get in the project. So There is a Ponzi-nomic aspect to it. Some projects probably depend more so on Ponzi-nomics than others. And I can't tell you which ones are going to dry up and which ones are going to, be around. But some are going to be around and some are going to dry up is basically what I tell you. So basically they're out there, typically, it costs 10 tokens to make a node. Whatever that initial cost is to make that node, you lose it. You're not getting that back in most projects. And the node pays you out, 1% a day. Some pay out more than that. I personally think that if they're paying out more than 1%, and it costs 10 tokens, that it's not going to be a sustainable project. They're going to have to cut those rewards to survive, or they're going to dry up because you can't pay people 2%, 5% a day and stick around. At least I've not seen that happen. So just my opinion though. So basically the basics, you put your initial money in, which is usually the cost of 10 tokens, and it pays you out 1% a day it's going to pay you out in usually how do I say this? It's going to pay you out in a token, and then you're going to have to transfer that token into a stable coin, or you can just compound into more nodes. I typically compound into more nodes. I don't need the money, right now. So, I just compound into more nodes. Eventually I'll have 1 million nodes and they'll pay out, I don't want to say $1 million, but they'll pay out a lot of money. And if and when I get to a point where I need the money, then it's potentially there. So that's pretty much it. If anybody has any further questions about it, I'd be happy to answer them to the best of my ability. But that's basically the basics and the concept behind it.
I have a few questions.
All right, go ahead.
So the question that I have is, how much are the coins typically to purchase?
Okay, so it depends on the project. There are some projects out there where the coins are like $4 or $5 a token. So, it's going to be pretty cheap to get in. There are some projects out there, the tokens are $500 a token. So it'll be a little bit more expensive to get in. There's, they have the gaming sector of crypto where people play video games and earn money playing video games. And there's a company out there called Gala Games. And I don't know, about a year ago, and I wasn't tracking this, but about a year ago, you could have bought a license to operate a Gala node, and it probably would have cost you $1,500 to $2,000 to buy that license. And today it'll cost you $95,000 to buy that. So that's the most extreme case of success that I know of, but it is out there. So most of them are not going to cost you $95,000. Right now, the market's been not doing well. So, like I said, the $5, the some are $30. So right now it's fairly cheap to get in. But what I can't tell you is I don't know who's drying up and who's going to be around, for the long haul. So that's why I say it's high risk.
Okay. And then,
Hold on, Demise.
so, I'm sorry.
Hold on, Demise. let me have him back up to clean up a few things.
Okay.
Sean, I know because I've been around you enough. But so you've talked about nodes, then you talked about coins, then you said license. So
okay,
and blockchain.
Yeah, so I need you to, I need you to not be what do you call me? One of those teachers.
teacher.
Yeah.
A bad teacher.
Clean it up.
Okay. Okay, so coin and token, I use those interchangeably. The best comparison I can make is when you buy stock, you get shares of stock. When you buy crypto, you get coins or tokens. You know, all crypto is not money like Bitcoin or Dogecoin. Some is, you got to think of crypto as technology. So when you buy crypto, you're for the most part buying shares of a tech company. Only we don't call it shares, we call it tokens. I don't know all the reasons why, but so a coin or a token is, think of it as comparable to a share in a traditional stock. So I don't know if people in this class or on this platform, I don't know if you guys have heard of Web3. So if you can think back, I don't know how old everybody is. I'm 49. So I was around before everybody had a computer in their house. I was a kid, but I remember those days. Okay. So in the early 90s, I think the internet was developed probably in the 50s or the 70s, but people didn't start getting it into their house until probably the mid to late 90s. So well, technology always moves forward and it's always evolving. So there's something out there called Web3, which is, basically a more advanced version of the internet that we now use. So going back to blockchain, well, that's how it's the underlying technology that they're using for the new internet, for Web3. I don't know if people have heard of it, of Ethereum, of AVAX or Avalanche. Basically, these are examples of, what's the best way to put it? When we're on this Zoom call, what is the highway or the underlying technology that Zoom is built on, that allows us to talk and, run the video and see each other? I don't know what you call that underlying technology, but there is something that makes all this possible. So Ethereum and Avalanche, and there are a bunch of other ones, are the underlying technology that people are building stuff on. These node projects are an example of one, but people are building things on that, and that is Web3. I don't know if people in this forum follow politics, but if you remember when Trump was the president, and there was all this back and forth about how Facebook was used to misinform people, how the Russians used it to misinform people, regardless of what side of the aisle you're on, both sides were basically accusing Twitter and Facebook of allowing bad actors to put bad info on there to confuse the American people. So, Twitter and Facebook and Amazon, they have the ability to turn people off. If you're blasting hate speech or making hateful tweets talking about killing people, et cetera, if you're too far outside the realm of decency, and the Facebooks and the Twitters and the Amazons, they are basically the people that decide what the realms of decency are. They can turn off your account. You heard people talking about Facebook jail. That's an example of you being shut down for saying something that the people that run the platform deem outside the lines. Well, on Web3, there's nobody to shut you down, So if you want to, talk about raping people, or you want to talk, be extremely racist, or however foul you may want to be, there's no cops, so to speak, out there to turn you off. So we're moving to Web3. I don't know a timeline, but it's coming, and like I said, I might be dead or 80 by the time the whole world is on it, but that's where things are going. And that's really what crypto is. It's the advancement of technology. And, you'll hear people use the term decentralized a lot, and what that means, and permissionless. people don't like it when they go to the bank to try to move their own money, and the bank asks them all these questions, et cetera, you know, and if I want to wire money to somebody in Europe or Africa, you know, it takes, I don't know, 3 days, a week. It takes an excessive amount of time to move the money. People don't like that. Well, with crypto or blockchain, it's moved in minutes. And I don't need some third party like a bank. I don't need their permission, you know? And so there's good things about that. There's bad things about it. You know, if I move it to the wrong address, yeah, the money's gone. You know, I might have accidentally sent it to somebody in this group. Are they going to send it back? Probably not. So anyway, I don't want to get off on a tangent, but I hope that answers the question.
Yes,
Yep.
that was very clear. Todd, do you mind if I ask my other
No,
question?
go ahead.
Okay. Thank you for explaining that in more detail. So my other question is, how do you go about, like, what system? Well, yeah, two more questions. What system do you use to purchase the coins for the node?
Right. Okay. So everybody has a bank account, or most of us have bank accounts. So they're to get your money from fiat, or what we use today, dollars, into the, I'll call it the cryptoverse. I have two accounts that I use. One is Coinbase, and the other is KuCoin. And KuCoin is KuCoin. So the idea is that you link your bank account. I link mine to Coinbase, and I'm able to move, you know, money from my bank into Coinbase. I'll buy something. I'll usually buy Ethereum, Avalanche, or USDC. USDC is a stable coin. It's pegged to the dollar. So it's like the crypto version of holding a dollar. It's not going to fluctuate. You know, it's not going to go up and down with the market. It's basically going to stay at the dollar rate. So you don't have to worry about moving, you know, say $1,000 into USDC, and then, you know, 5 minutes pass and then your $1,000 is now worth 700 because, you know, the bottom fell out the market. It's going to stay pegged to the dollar. So anyway, I moved the money from the bank to Coinbase, and from Coinbase, I move it to, I have something called a MetaMask wallet, which is, if you go to metamask.io, and you have to use Google Chrome, you know, and it's one of the extensions that you can, that are a part of Google Chrome. So I have that wallet. I have something called an Atomic wallet, and I use KuCoin. So the idea is you move the money from your bank to a centralized exchange like Coinbase. Think of it as crypto's version of, say, a TD Ameritrade, a Scottrade, you know, a stock brokerage account. And then the money has to be moved from the centralized crypto exchange. To me, the easiest place to move it is MetaMask or the Atomic wallet that I have, or to KuCoin. And there's something on the crypto side of the house that are called DEXs, or decentralized exchanges. And all of like the DEXs and the node projects, all of these things have websites. So once you have your wallet, then you can just go to the website and connect your wallet, and you can buy whatever tokens that you may be looking to buy. And once you have the tokens, you go to the site and you create your node. A lot of these sites will have a button on them that says buy token, and they will connect you directly to whichever DEX is needed to create the tokens. So it sounds complicated. It usually works a little better if you can have somebody show you, or I don't know how many YouTube videos I had to watch to teach myself a lot of this stuff over over, I don't know, I'd say really the last year. I mean, I've been messing around in crypto since 2017, but I didn't start getting involved on the decentralized side of the house, outside of Coinbase until probably, I don't know, probably really within the last year.
And it takes about what, 30 minutes to set it up? If you know what you're doing.
Probably not that long. Like, I mean,
Coinbase is very quick.
yeah. Back when I
Yeah,
got
we're
in
not
Coinbase,
talking about Coinbase. We're not talking about Coinbase. I'm
you
talking
have
about
to
the entire
listen.
process of getting your wallet.
Listen. There's a learning curve to it. So really setting up Coinbase is quick, like he said. Setting up a MetaMask wallet is quick, like he said. But learning how to use everything, getting comfortable with moving assets from Coinbase to your wallet, as an example, that's the learning process. So it is very quick to set everything up. To set the tools up is not a long, drawn out period of time, but learning, how to use everything, because everything's not interchangeable. We're early. So if I want to buy for example, if I want to buy a node project that's built on Avalanche, I got to buy the right token, AVAX, and get my money to the Avalanche blockchain. If I want to buy one that's on the Ethereum blockchain, then I can't use Avalanche. I got to use AVAX. So part of it is learning, okay, is this the right token? Because if I send it over there and it's the wrong token, then, potentially my money's gone. So setting up the tools is not hard. It doesn't take a long time, but the learning process, because there are different blockchains, Avalanche, Binance, Ethereum, Polygon, Solana, so depending on where you're at, where you want to do your business, do you have the right token? That's where, the learning really starts to come in. And wrapping your head around the idea of your address, that long series of numbers. I don't know if you've ever seen me copying and pasting a long series of numbers. That's your address. You know about it because you've moved crypto into Osprey, I believe. So, that address is important. When you build the wallet, they're going to give you something called a secret a phrase, or a mnemonic. You got to save that, because when this computer that I'm on, when it gets too old and it stops working, and let's say I got a MetaMask wallet that's on this computer, when I get my new computer, I'm going to need that phrase to access this wallet. Otherwise, all that money that may be sitting in that MetaMask wallet, it's gone. So I don't know if you guys have ever heard of people that invested in Bitcoin back in 2012 or whenever, they bought, I don't know how much Bitcoin may have been, maybe 50 cents a coin. They might have 200 coins and they lost the wallet. What they really mean is they lost that phrase. So, because they didn't think Bitcoin was going to be $40,000 a token. So at some point, they was like, oh, it's nothing. They lost the phrase.
It was like losing
Bitcoin,
a password on your computer.
Right. So there is nobody out there that you can contact and say, hey, what's my phrase? What's my password? If you don't maintain it, it's gone. And that's why these people, that invested early, and they may have all these tokens that maybe worth millions of dollars, it's gone unless they produce that passphrase some kind of way. So that's where the self-responsibility comes in, and the learning curve comes in, because if something happened at the bank, it's FDIC insured, and the bank is, if I lose my bank password or whatever, there's somebody I can call. Hey, what's my password? Can't get in my account. With crypto, if you got thousands of dollars, sitting in that MetaMask wallet, you lose that password, or you're going to have a password to get in it. And if you lose that phrase, if your device gets corrupted or stops working after 5 years or whatever it is, you're going to need that mnemonic phrase. You're going to need that wallet password. you cannot lose those.
How do you go about determining which project is best to purchase?
Well, I watch YouTube and I follow crypto people on Twitter. And just over time, you just develop kind of a sense or an idea of that's not a good project, or yeah, that project looks solid. Some stuff is going to be obvious because you're gonna see a real world use case. And what I mean by that is that if you have a node project like Gala that's securing the Gala blockchain, and you know there are millions and millions of video game players out there, and you might have kids that are playing these video games. I mean, it's kind of a no-brainer. Yeah, I can buy this. This isn't going anywhere, you know, that kind of thing. In the crypto world, there's something called NFTs, non-fungible tokens. They're huge. People pay millions of dollars for some. You know, I don't understand why they do, but there is a market. So if you're involved in a node project, maybe that's talking about your node becoming or being an NFT or having some sort of functionality, you know, with NFTs, it's probably a decent, you know, guess or yeah, decent guess that project is not going to dry up, you know, in 6 months and be gone. So a lot of it is just educating yourself, you know, and you know, unfortunately, it doesn't happen overnight. You know, it takes time, you know, and it's going to take time to kind of get used to. I don't know. I don't want to call it the jargon, but just it took me a while to get used to things in crypto. I could always see the parallel to stocks, but there are some differences, and you always got to keep in mind that for the whole entire space, it's early. So the way things are today is not how they're going to be 5 years from now, 10 years from now. The way I was describing those different blockchains and the projects being built on the different blockchains and you having to have the right tokens to interact on that blockchain, I would imagine that at some point in the future, it's not going to matter. You're just going to be able to go to a site and behind the scenes, they're going to have some network built up. So if you, for example, have Ethereum tokens and you want to do something on Avalanche, you're just going to click a button and behind the scenes, they're going to exchange your ETH for AVAX and go through with your transaction. Right now, we don't know what's happening at the pure tech level to make us be able to talk on this Zoom call. You know what I mean? As an example, or when you go to buy whatever you may buy, you know, online from Amazon or from wherever you may buy it. I mean, what is the underlying tech that makes all that talk and make you able to shop online? I don't know. I don't think most of us know. We don't care. We just want the front end experience. So crypto is just not there yet necessarily with the front end experience. So that's why I have to go through the complicated steps of switching out my tokens as an example. But I would imagine that some years from now, we probably won't necessarily have to do that.
Is this I mean, I'm intrigued. I'm just intrigued with your level of knowledge and understanding that you have learned over, you know, whatever that time frame was, a year plus. So thank you for sharing. But yeah, it does sound like a foreign language, but I'm intrigued by it. But the question that I have is this all kind of tied into this new meta world that I'm hearing about?
So yes and no. The meta world is part of it, is crypto, but everything crypto isn't necessarily meta or the metaverse. So like for example, Ethereum, I've been buying Bitcoin tokens and Ethereum tokens and some other tokens, Dogecoin. You know, I've been messing around with a lot of this stuff before the metaverse. Anybody knew anything about a metaverse? So it's not necessarily, there are some projects that are going to be meta specific, you know, and there are some projects that really have nothing to do with meta. Now, maybe down the road, you know, like for example, people are buying land in the metaverse and they're paying like real land prices for it. Like maybe in some cases more, you know, they're paying thousands and millions of dollars for plots of land in the freaking metaverse. So maybe down the road, you know, and maybe they're even doing it now, you know, maybe use Ethereum or Bitcoin to pay for that land. So there's a connection or interoperability there. But if you buy Bitcoin as an example, you know, and you're just holding it because you believe it's going to go up in the future, there isn't a connection to the metaverse.
Okay, thank you.
I have
Sometimes,
another.
go ahead.
I'm sorry, I just wanted to ask the question, what is the difference between buying a node and staking a coin?
Okay, so they're actually pretty similar. I would say the difference is for most node projects is when you buy a node, those 10 tokens or that initial amount of money you spent to buy the node, that's gone. When you stake, you can unstake, you know, whatever you staked. Basically, it's not gone. You can unstake it and get it back. So the other difference is most of the time when you stake, I don't know of any place that you can stake and get 1% a day. I'm not saying it doesn't exist, but I don't know of any place. So what's attractive about nodes is you're getting 1% a day in most cases.
But-
So I
But
do
when you
some.
say,
Go ahead.
you just said that the money is gone. What, I mean, is it basically comparable to buying a bond or something, or like
Yeah,
bonds?
I would say that because when you buy a bond that, you know, you put X amount of dollars in the bond and the bond pays you out, you know, whatever the percentage is a day or week, a month or whatever, but you can't go back and say, hey, give me back. I'd like to withdraw my $10,000 out of this bond. So yes, it's similar in that regard. Once you pay the 10 tokens and, you know, if a token is $30 a token and it's 10 of them, that's $300. You pay that $300, you know, now you have your node, but you can't go back a month later and be like, hey, I'd like to withdraw my $300 because I don't want my node anymore. You know, you're going to get your 1% or whatever the percentage is that they tell you that you're going to get. And that node price is subject to go up and down, you know, but you can't ever go back and say, give me back my $300 in this example. You're stuck.
It's almost
with
like a CD versus an option.
Or something like that.
Probably, I don't know a whole heck of a lot about options, but CD, but like a CD, well, a CD, you do get it back after it matures though.
Right,
So,
but the maturity, the interest that you're getting, you're putting a bet down to say, hey, I'm going to get 1% interest on this money. Therefore, they're holding the money to let it ride, right?
that is right. And with a CD that you're getting 1% over what, a year usually, I guess it could be 6 months, but it's not 1% a day.
Right,
you
but
know?
it's a long-term hold. Like with an option, you have the option when it comes to that price, that strike price, to sell the option or not, right? I don't know a ton about options, but I'm just kind of making a relative comparison between the two.
There are some loose comparisons. I just in the interest of trying to be completely transparent and not confusing people, I just, because I don't know a lot about options, I just didn't want to co-sign on the option one, but there are some loose comparisons.
Okay, and with the node, there is no expiration date or something, or like pay, I mean,
Well,
how,
the expiration, there is
that-
not an expiration date, but the expiration date is you could always invest in a project that goes away, or in crypto, they're going to call it a rug pull. You put your money in, and maybe they have no intention of ever even delivering on what they advertise, or maybe they honestly tried, and like many real world businesses, it fails. So that's the expiration date with the node. If the project survives, then there is no expiration date.
But that would mean you lose your money or you lose that investment. Am I understanding this right?
Yes, that's correct. And that's why I call it high risk.
Mhm. And I just wanted to mention, I think it was Demise who asked to find out research or whatever about which projects to check.
Mhm.
I have a friend, she also is into crypto, and she told me looking into, I think it is coinmarketcap.com or something.
Yeah, I use CoinMarketCap.
Yeah, and they have white papers, or at least links to white papers for each project that they list, or each coin. So that's also a research tool I just wanted to mention.
Yeah, I mean, what I would say is, if you also CoinMarketCap with crypto, I've never been a victim of this, but supposedly there are a bunch of like dummy sites out there, and if you log on to a bad site and you connect your wallet, then the people have the ability to drain whatsoever in your wallet. So the way I use CoinMarketCap or CoinGecko is I'll go to those sites and I'll punch in the token that I'm interested in, and CoinMarketCap has the legitimate website on there, and I'll click that link and it takes you to the legit site, and that's where I access, like she was saying, that particular project's white paper.
Do you need to connect your wallet in order to access the white paper?
No, you don't need to access the white paper, but if you get to a point to where you want to buy tokens, you're going to have to connect your wallet. You can go to the sites without a wallet. You can go to CoinMarketCap now and click on, a particular link. It'll take you to the site, and you may not even have a wallet. You don't need a wallet to go to the site. You don't need a wallet to read, what they may have on the site. You just need the wallet if you want to interact and create a node, as an example, or buy tokens.
So even though it's high risk, I guess that's why you can potentially earn the 1% per day. And I'm assuming if you're discussing this with us, you have found success with since you've been using this investment tool. Is that correct?
Yeah, that's correct. I own, I'm probably in 3 or 4 different projects. I probably own, across the 3 or 4 different projects, probably, I don't know, 10 or 12 nodes. In most cases, when I bought my nodes, the underlying tokens were higher priced than they are now. I mean, but the projects are alive and I'm getting my 1% a day. So part of me wants to tell you now is a great time to buy, because like I said, that the tokens are a lot cheaper than they are in many cases when I bought in. But the other part of me, I don't want to tell you to buy, and then 2 months from now the market keeps going down, and then project dries up, and then y'all be on this Zoom call looking for me. So that's and that's what I mean about it being high risk, and at some point you have to be an adult yourself and either agree to take the risk or not. Like if there's an underlying token, as an example, and it's $30 and it costs 10 tokens to buy a node, that's $300. That's cheap for a node. People usually pay, in the thousands to create a node, because, maybe the underlying price is $200 or $300 or $500. So, but I can't predict where the prices are going to go. So everybody has to make that decision for themselves.
So if you can potentially lose money like any other type of investment tool, then there is no guarantee that you're going to make 1% per day, correct?
Well, I guess in theory that's correct, but what I would tell you is I'm making 1% a day. Now here's the difference. If I create a node now, let's say the token's $100 a token, costs 10 tokens to create the node. So it's going to cost me $1,000 to get in. So I'm thinking, okay, I'm going to make 1% of 100, which is $10 a day. So you're getting your 1%. But what happens next week if the price meanders down to $50? You're still going to get your 1%, but you're not getting $10 a day. You're getting $5 a day because the underlying token price is now $50 as opposed to 100. So you are getting your 1%. Or on the flip side, you buy in at 100, costs you $1,000. The price goes up $50. You're getting your 1% a day, but it's not $10, it's $15. So that's how it works. You're going to get your 1%. I've not ever been involved with a project that didn't pay the 1% unless it dried up and went away, rug pulled, whatever you want to call it. As long as the project is alive, you get the 1%. And in part, you get the 1% because these things are built on code, smart contracts. So it's in the program. If the program says to pay out 1%, then it's going to pay out 1%. We as humans can't go in and alter the contract, the smart contract. So maybe that's in part why, you get the 1%, but that underlying token, that price does fluctuate. And I think we're in a bear market. I don't know if we technically are, but I think we are. And that's why the prices of everything has gone down.
And also, you had a strategy to buying yours, right? Like you didn't just buy all your nodes at once, correct?
Right. Yeah. So, I mean, again, that's just, risk management looks different to everybody. I don't believe in piling all into anything, because I don't know what's going to happen, so I bought different projects because I didn't want to have all my money in one. Were there advantages to being all in one? Yeah. If things would have went well, yes. But I bought across different ones because if some didn't make it, then I would still have some money working. And if I'm honest, early on, I did buy one that didn't make it, and whatever I lost in that one, I've made back through the other ones, if that makes sense. So, but those are all, decisions that people got to make. Similar to this trading, I might be comfortable only risking 1% of my account. There's people in here that might be cool with risking 10% or 5%. So how you choose to diversify yourself, it's not really for me to tell everybody how to do that. It's not really for me to tell everybody, oh, you got to buy this, or no, don't buy this. You know what I mean? At some point it becomes a personal decision.
Any other questions?
Guess
I got a
not.
question.
Okay.
Where you buy nodes specifically?
So again, it depends. You have to, each project has their own website. So
Okay.
I don't have a problem shooting out a bunch of different projects to get people started. But the way I found them, the ones that I'm on is, I'll go on a platform like YouTube and I'll type in the word node and search, and it's going to pop a whole bunch of stuff up. You know what I mean?
Okay.
Also, just in following, some of the guys, the crypto guys on YouTube, they'll talk about crypto Twitter. You know what I mean?
Mhm.
So, I don't really know a whole lot about Twitter, but I managed to get on there and follow people that invest in node projects on Twitter. So,
Mhm.
when you start, you got to think of it like I'm smarter now than I was when I first started. And I learned a lot on YouTube. I'm learning a lot on Twitter. Like when I came in, I didn't realize that if a project, for example, was paying more than 1%, it probably wasn't sustainable. But I quickly found that out, so there's just things you're not going to know everything at the beginning. You're going to evolve and get smarter and better over time. The object here is to try not to have it be an expensive lesson though, kind of like with
Mhm.
trade, you're going to be a pretty good trader probably at some point down the road if you aren't already, but hopefully you learn all the hard lessons in a demo account versus in a live one, because it's an expensive. And same thing with crypto. Everybody on YouTube doesn't give the best information, but I use YouTube not to treat those guys like they're preaching the gospel, but for ideas,
Mhm.
and you just have to go to those sites. You have to read some of them boring white papers. I follow certain people on Twitter, and you at some point you just gotta make a decision, and therein is where the risk comes in.
Okay. Thank you for your answering.
All right, no problem.
You also you only watch crypto too, Sean. I mean, there's nothing else on your TV but crypto Bob, or whatever the hell the dude's name is.
Since you left, there's other things on there,
Whatever, dude. Whatever.
I've been watching Netflix. I watched the Nets destroy the Sixers the other night, so a couple other things.
All righty. Anybody have any more crypto questions? Cool. To the charts. Appreciate it, Sean.
No problem.
Hopefully you work on your teaching skills.
Leave him alone, Todd. He did great. Leave him alone.
Hey, I just tell you like you always tell me.
I know, right?
Appreciate it.
That's,
Hey, I didn't.
Is
I
he?
didn't
Are
prepare
you big?
anything.
Are you big brother?
Yeah, I'm 14 months older than him. I mean,
Okay.
physically he's bigger than me. He grew to be bigger than me, but I'm older, I guess.
Older. Okay, got it.
All righty, let's talk about charts. Shay, you on here? I think I saw Shay in the chat a minute ago. She left. Okay, so first thing I wanted to, I don't want to leave here. Let's talk about interest rates, since we never hit those until it's too late. Reason I bring up interest rates is because the U.S. is going to have to raise interest rates. We just had our latest CPI. CPI is inflation. I don't have to tell you all about gas prices. We already know what time it is on that. Inflation came in at 8%. So we can all expect a nice hearty interest rate hike. I wouldn't be surprised to see the interest rate go up to like 2.25% hikes at once. I don't know that they'll do that, but they really do need to do that because the inflation is out of control. So all I did was go to global-rates.com, and then I clicked on the central banks. Then I clicked on change here, all right? Because we want to be cognizant of who's changing their interest rates and when. We should see a lot of different interest rate hikes in the coming months. We've seen several already this year. And if you are watching, you're getting paid as they hike these rates up. So this past week, the Poland central bank raised their interest rates. I don't know if you guys trade the Polish dollar. I don't trade their currency. The Canadian bank raised their interest rate. They were the latest ones to raise their interest rate of the people that I trade. One of the cross pairs. So last week, we were able to catch a couple of trades going to the top side of the Canadian dollar. And this next week, as you see, it gave us a bullish order block. This next week, we'll be able to keep on taking this currency up to the next level, which brings me to one of the strategies that a lot of you have been trading, the easy money strategy. At least for me, it hasn't been that easy, since the war started. And I think partially that's due to my greed. I only want to trade the easy money strategy on the currency pairs that move the greatest distance, which were the euro and the British pound, due to that war, and they haven't been rewarding me on the easy money strategy. I have, however, found decent success by trading the daily and weekly order blocks. Okay, I did get cooked out of a trade last week on a Euro GBP pair, but that's the first order block trade that I've lost this year. So order blocks, especially on the higher time frames, are going to be your best bet to make money. Okay, let's talk about this trade that I see potentially, and then we can take this same thing that I tell you here, and you can apply it to your smart money trade. I've been hesitant to even, I guess, delve into the information at this level because I get a lot of questions, and sometimes the questions are not the they distract from what I'm trying to show you guys. All right, so the the place that I went to find the interest rates are global-rates.com. Okay, global-rates.com. Okay, so let's look at the CAD JPY. The Canadian dollar is pushing to the top side due to the interest rate hike. So I want to be able to take advantage and trade this pair up. It gave me exactly what I want to see. It gave me a bullish order block on this weekly time frame. So I can expect the price to pull back. I would like to see it pull back into my order block before it pushes higher. All right, so I'm going to go ahead and fib this candle, this last weekly candle, which is this green candle. I'm going to fib it from the bottom of this green wick to the top of the green wick. And my golden zone is here, okay? I'll go ahead and mark it out before I delete it later. This is where I can expect, or I expect price to pull back to that golden zone, right? So since I'm trading this currency pair, when the market opens, I can trade this down at least 95 pips. I am going to take this trade because, I'm going to try to get paid as many pips as I can. So I'm going to delete this golden zone that I just drew out just so I can show you guys something. All right. when I zoom in here, my golden zone was right around this area, right? Had a little overlap to this area. But what I want to call to your attention is price is not just coming back to the order block because it's my order block, right? Price is coming back to this order block because it needs to fill the imbalance, right? There is no imbalance here. As you can see, this is good, healthy price action. You see the wick of this candle. You get the green candle that comes up. Price pushes back down, closes any imbalance here. There's no imbalance. That's good, healthy price action. Then you get a expanse here. This candle does not pull back down to close the imbalance here. Instead, you get another bullish candle that pushes up. So now when price comes back, we have to mitigate into this imbalance, okay? So the way I go about doing this, in the same tab that you can find your fib, you can get a GAN box, okay? You put the GAN box on this imbalance. Shay, I disagree with you, but I'm gonna put this GAN box.
Todd, that is imbalance.
Okay, I'm gonna give you a chance. Right here. This is where I can zero in and look to take the trade. Sherry, you saying that this is imbalance right here?
Yes, I am.
Why would you call that an imbalance, Shay?
Because imbalance is any time when the market hasn't filled. I'm not saying it will go there, but I'm just saying that that is an area of imbalance.
Okay,
There's nothing that filled that.
so imbalance, you have to have a 3 candle set to call this an imbalance, correct? Is that how you were taught?
No,
Okay, so the way that I view it, and the way I was taught this, is you can't have an imbalance without 3 candles. So you see this red candle, this last down candle? This
as
green,
yes,
this green
yes.
candle pushes up. The wick of this red candle is here. The only thing this candle has to do is push down to this wick. No imbalance.
Right.
Price
But below that wick is also, so that can also be an order block.
You
So
mean
if
right
you
here?
highlighted that, no, below the green wick that you're saying that it's filled, there's money below that.
This is a daily order block, correct?
Right. So order blocks and imbalance kind
Yeah.
of go hand in hand.
I feel you, but this is what you have to understand about where this sits. This daily order block won't be mitigated on the way up. It won't be mitigated because there's a weekly order block right here. Price is going to come back, tap in on the weekly. It's going to push up. Does that make sense? It's no different than if I'm taking a trade to the top side and I have a monthly order block and then I have a daily on top of that monthly. Price is going to interact with that monthly and push down, unless there's a reason, a fundamental reason to push through that higher time frame order block in order to get to the lower one. That makes sense?
I'm following.
Can you repeat that? Can you repeat that last statement as far as like
Okay.
why it goes?
So
that order
okay. For those of you who have been with me for a while, we frame the market. And when we frame the market, we go find the monthly order block, then we find the weekly order block, then we find the daily order block, right? The trade is going to happen in between those order blocks. For example, my price is here, right? So if I'm looking, I'm just going to frame this for the benefit of everybody, okay? Let me take away these other marks. Okay, so I need to find where price is as far as the monthly, right? So this is nothing. So here's the monthly order block on the bottom, right? This is the bottom of my market. This is a monthly order block on top. So I know my trade is going to happen between these two order blocks, right? I'm going to drop down to the weekly. So prior to this last week, the weekly order block was down here. This would have been the highlighted order block. I knew my trade would have happened between this order block and one that's above price, okay? So what I want to do is go over and find an order block, look like prices right here. All right, we've wicked through that. We wicked through the top of that order block. So I need to go higher. Okay, so this would be my area of emphasis, right? So I know my trade is going to happen between this order block and this order block. Prices came up, rejected at this order block, came up, rejected at the order block, came up, rejected at the order block. Price is going to push through this order block. All right, there's a fundamental reason behind price pushing through the order block, right? We just discussed that. We just saw why price is pushing higher with the raise of interest rates. So now I want to do the same thing on a daily level. So when I drop down to the daily level, I have that area that that Shay is pointing out as the imbalance. It's a daily order block. But because prices between these weekly order blocks, price is not coming pushing through, invalidating this weekly order block to get back down here. That will happen at some point in the future. It's just not, it's not happening now, you know, due to the fundamentals. So I don't need to mark up that daily order block that's beneath where my price is, okay? What I need to do is try to find a daily order block that's above. Because it's within the weekly order block right here, I'm not even going to mark it up. I know price is pushing through here. It's trying to push higher through this order block. So because I have the weekly order block established, I know price is going to push down into the weekly order block and try to get momentum to push back out. So when if I want to clean up the area that I need to look for a trade, because I don't want to protect this entire order block, if I wanted to get a better trade with a tighter stop loss, I go down to find my imbalance within this weekly order block, right?
Hey Todd,
What's up?
can you go back to the weekly real quick? And is that little order block right there at the top, the green one, kind of, is that not valid anymore?
Well, it is. Well, because it hasn't broken the top. But my point is, it's in the weekly, it's going to push right through it, right? It's
Gotcha.
So when I take this trade from here, I'm taking this trade to equal highs for my break even or whatever, but I'm looking for the trade to push through.
After it comes back. Yeah, after it comes back down, you're looking for it to push through that no matter where exactly it is.
Yeah. We're going through here.
Yeah, and that small green one, that's been mitigated.
Which small green one? This?
No, it hasn't. That's why I was asking, because I think I marked it.
The top of it hasn't been broken.
Oh, the top of it hasn't been broken,
Yeah,
but the block itself has been mitigated. I mean,
It
based
doesn't
on
matter,
SMC
okay?
stuff.
It doesn't matter. This is still a valid order block. This is still a valid bearish order block. until it breaks the top, this is valid.
It is down here.
And I know some people teach order blocks differently, but if you're trading the way I trade, you need to understand what you're looking for the way I understand. Does that make sense? For instance, if you take Savannah's smart money course, she's going to show you this is an order block. I mean, that's cool in Savannah's course, but that's not the way that's not the way I teach it, right? There are a number of ways you can use these order blocks. But if you want to emulate the way I use them, I need you to understand the way I see it. Okay. You know, and it'll benefit you if you're trading the way I trade. I can't help you trade and find success any other way except for the way that I do it. Okay. So if you're a successful trader and you trade it differently, by all means, stick to what you're doing. If you've not found success, and I surely have, I will tell you and show you how to do it the way I do it. That's all I can do. So this, because price is pushed here already, I already know I'm big joker guaranteed to get to this high, right? Because there's a fundamental reason why the Canadian dollar is pushing to the top side, I'm pretty darn sure that we're going to push through this order block. I can't tell you when, you know, I think that the next week's candle will push through the top of this order block. But, you know, again, we don't control the time frame. We just understand where we're looking to go. Okay. So eventually, I'm looking for price to get to this level once we break this order block. It's not to say that it has to go straight there this week, right? It could come up here, it could fall down a little bit and then push up to the top side. The point is, we have to understand where price is trying to go, all right? And we have to understand the why behind the price. So knowing why my price is pushing up, all I'm looking for is an entry to get into the trade to go to the top side. And the way I do this is I throw the fib on here, right? I want to make sure that I'm getting a discounted, getting into the trade at the discounted range. That's why I throw the fib on. Anything below the 50 or above the 50, in this case, is a discounted range. So the 50, the 60, the 71, or the 78.6, all those are great entries. But you start looking at the 50. So when I throw the fib on, my entry was somewhere from here to this red line, right? I threw the GAN box on because when I dropped down to the daily, I found the imbalance that coincided closest to my 50, right? There was an imbalance here. It's within my order block. This has the highest likelihood. This is at the highest likelihood. This is where price is going to come and push back up. Now, some people believe that that price will fill the entire imbalance. Other people say it fills 50%. All right. What I'm going to tell you is whichever way you want to trade it, you trade it. But for me, this is how I'm going to trade this, right? This will give me about a 6.5% gain on this trade. I expect price to come mitigate this order block at least to this 50%, right? So you got to take into consideration your broker and your spread and all that good stuff. So if price just mitigates to the 50% mark and you have your pickup at the 50, you might miss this trade by 2 pips, 3 pips, or whatever. So maybe you need to set your entry a little bit further up, okay? And when it comes down to your stop loss, you set your stop loss a couple of pips below this imbalance, again, due to your spread or whatever, right? But if you do this, you're going to get in this trade and you're going to have a pretty good risk to reward, and you can take this trade to the top side. Hopefully, it'll push up, this would be an all week trade. Generally speaking, if you take a trade on a weekly order block, you can stay in that trade the entire week, right? And maybe even the next couple weeks. So if we look at this trade right
Am I the
here,
only one that can't hear him?
can you hear me? Can everybody hear?
Yeah, I can hear you.
Yes, I can hear you.
Okay. So if you go back and you look, all right, and I encourage you guys to back test. You look at this weekly trade comes down, you get 3 weeks of pushing up. Weekly, you get 2 weeks of pushing up. Still, you could have been in the trade several weeks, right? And it's still pushing up. The point is, we understand that we're at a weekly order block and price is going to push up. We just want to make sure that we find an entry into the trade that can push up. Since I trade a funded account, you can't stay in the trade over the weekend. Some people can hold their trades over the weekend if you're trading a personal account and you don't have to worry about it. You get in the trade and maybe you don't worry about this trade for the next month, it pushes up 4 weeks in a row or whatever. Managing your trade is going to be a personal thing. But if you go back and you back test what I'm telling you and what I'm showing you, you're going to see that when you have these order blocks, price will push in your direction, right? And for the most part, if you wait for this wick to wick you in, you'll have a greater deal of success than you will trying to chase a trade that doesn't come back and wick you in. Does that make sense?
So in other words, wait for it to hit the POI rather than chasing price down in a sell to get to the buy.
That's not what I'm saying. I agree with selling this down, with hedging. Selling this down to a buy is what I'm definitely going to do. But what I'm saying do not do is, let's say, for instance, that you frame this order block right here, right? Let me just see if I can rewind this. So here's an order block that we see on this weekly time frame. Let me drop down to the daily and find the imbalance. Here's an imbalance within my weekly order block. I'm fibbing the green candle. I'll just have it way over here because I don't want anything. Oh, I guess I'm not fibbing. I want to fib this green candle so I can see where my golden zone would be for my retracement. Okay, because my golden zone is here, I'm going to move it and target this imbalance. Everybody see this imbalance? From the top of this green candle, there's a wick. This wick should come all the way down to cover this green candle, this imbalance. Because it didn't, this is the area that I would target for a trade entry. Now, I'm going to hit play. Trade doesn't come down and get you. So what I'm telling you is don't just go and throw you an arbitrary entry into this trade, right? You either enter, maybe you get a daily entry off a daily order block, or you wait until your next weekly entry. All right, because if you run up here and chase this trade, let's say you chase and get in here, you go right in the drawdown, right? So that's why you don't run and jump into a trade that doesn't come and get you. All right, you're patient. If you have your order block right here, You have your 50%, your discounted range for this trade. If this doesn't wick you in the trade, then that's not your trade. Don't worry about it. Get in the next trade that happens. Does that make sense?
Yes, it does.
Okay, so this is where I'm looking to enter this trade and take it to the top side. I am going to take advantage of the sale. And this trade is one that I'm going to use for the easy money, right? Because I know that this is going to push down into this zone here. There was a trade that a few of us took Friday. Maybe it was Thursday night. Thursday night, Terrence?
If you got in correctly, it probably would have been like 4 in the morning.
But yeah, I definitely got it correctly.
I didn't.
Like, it's not funny, but
I was greedy. I got in early. I got in Thursday night.
It happens. So the only way you wouldn't have gotten burned if you knew how to drop down to the 1 hour and find where price was going. And that was right here that you could have got in. But basically this trade gave us an order block. And the problem with this order block was if you don't know how to drop down and find an entry and you just got in at the order block, you would have had to protect, I don't know, 145 pips or so, right?
Hey, it did get to the golden zone though, like you said. It just took a while.
It did. And that's the thing, man. You have to exercise patience, you know. Only thing that happens fast in these markets is accidents, right? Accidents happen fast. So if you don't wait for your confirmations and your entries, you're gonna burn yourself. So some of us sold down first, right? And a lot of times that will help you out because if you're selling it, you're gonna keep seeing your sell trade in this case, or I mean, if you're buying it down, buying it up to sell it down, you're gonna see your buy trade going into profit. And if you're seeing your buy trade, your profit keep running up, you don't have to worry about you don't have to worry about selling it. Now, once you see the rejection, right? Once you see this rejection and it gives you this bearish order block, you could have looked for an entry on this next candle, right? That's on the 4 hour. But the same thing happens on the 1 hour. It also happens on the 15-minute. You don't have to wait for this 4 hour rejection. You could have saw this rejection on a lower time frame. You know, you could have caught this rejection on the hour. Immediately you get a bearish order block. Immediately you're wicked in the trade. Immediately you're in profit, right? It pulls back a little, but you end this day in profit. There are a number of ways to I guess we call it refine your entry. But a lot of us get caught up on I guess what we call sniper entries, right? If you're trading a daily or a weekly order block, I would say sniper entries is nonsense, man. Like you want to get in the trade. There are several opportunities to get better entries, right? You can have 2 or 3 positions in a trade that you take from a daily or a weekly time frame, right? So speaking of which, I told the people that were this trade, we left a lot of meat on the bone here. This trade is going to keep pushing down, right? There's fundamental reasons why the euro and the GBP are pushing down, and they push down 700 and 800 pips. This trade was one that I really wanted to take advantage of for the easy money trade when the week started last week, right? This market had pushed down 760 points or 760 pips last week. So those of you who know me know I like to do a strategy called the easy money strategy, right? And that's where I want to take the trade immediately when the week opens, the opposite direction, so it can keep pushing down. But this trade didn't do that. As soon as the week started, it pushed straight down, right? We got this violent down move. We got a Judas swing back up to the upside. And for the next 2 days, it pushed up, right? That Judas swing happened immediately. So Sunday, it pushed down. Monday, it came back up. Tuesday, Wednesday, and Thursday, it gave us our bearish order block. We hopped in the trade for the sell, and it started pushing down. And it ended right here Friday. So what I expect is for the market to keep pushing to the downside. All right, it's only pushing to the downside because, the Russians are invading Ukraine. There's a lot of uncertainty in the market. So I'm going to look to take this trade down to this level. That is an order block. It's a weekly order block. I don't know when it would get to this weekly order block, but this is where I'm looking to take this trade down to these levels. Now, I need to still find these other order blocks. I know y'all. I know what y'all are saying. Why don't he use extend to the right? Because price pushed into this order block and rejected, I'm expecting to be able to take price to this order block, right? Once it breaks this order block, I expect price to hit this order block. So if you're looking, or if you're hopping in this trade, this trade will end up pushing 400 pips again this week. Okay, so this one and Euro NZD is going to push down as well. NZD is pushing down, or it's pushing to the upside because this is Euro. It's pushing to the downside. That's going to coincide with their interest rate as well. NZD raised their interest rates. I want to say it was March. It's February 22nd. So that currency pair is also pushing to the top side. And if you want to have some decent trades, NZD Chef, NZD JPY, or CAD Chef, CAD JPY, those trades will normally push the hardest to the upside when you have interest rate changes. Now, I say that with with a grain of salt because we're in war times, right? So when there are uncertainty in the market, a lot of times the JPYs will gain strength. So in this case, this is the first war that I've traded. So far, the NZD JPY. Yeah.
You got any thoughts on the entry for that one that you just left? Like, are you waiting for it to hit that old order block again, or?
Well, I think it's going to pull back a little bit. Yeah, but
okay, all right, cool.
I'm going to play it by ear because it doesn't need to retrace very much for the other one, right? I think that once it retraces a little bit, it'll be time to go. You're not going to find any easy money retracement on that because it did it already, right? Only thing
Yeah.
it did was it pushed down. What did we get? Like 70 pips out of that? You know, I mean, it's going to do a small retracement, but it's going to have to go about its business. So I would look for it to push down, you know, immediately like it did last week, probably. That's what I'm thinking. You know, I mean, you know, you're gonna have to get your confirmations as far as you know, the break of structures to the downside, but I think we should be able to look for that fairly quickly. What I was saying about the New Zealand dollar is pushing up against the JPY. CAD is pushing up against JPY. But if you look on the flip side of that, those currency pairs were pushing down, you know. The GBP and the Euro pairs were pushing down because of the war situation. We got a daily order block pushing back to the top side. You know, I'm kind of treating this like it'll slowly start pushing up, but this level is a daily order block that's been pretty well respected. What I do notice is the lower high and a higher low. So this area, to me, this pair is not worth me trading over a day, right? Like if I see a daily order block and I trade this pair, I'll be in profit. I'm closing out when the market closes the next day, because I don't know if this is going to push through here or push back down. So outside of me trading this bullish order block from here, probably up to this level, you know, I wouldn't feel comfortable trading this any other way. To me, this is a downtrend. You know, I mean, how much movement am I going to get? It just, in my opinion, this is not a good trade for me to take.
Chef has a juicy one.
What's that?
USD Chef.
Yeah, but all those USD pairs, that was really where I was going with this. So all the USD pairs, you know, I would really expect to hear that they're raising the interest rates here shortly. I mean, there's no way we make it out of March without these clowns raising the interest rates.
That weekly candle is huge.
Right, but I want to see when the FOMC meeting is. Does anybody know off the top of the head? Retail. Okay, so the 16th, we got the FOMC meeting. So, man, there's no way we make it past the 16th without the raising. I would really anticipate the raising interest rates this week.
You would do easy money on USD though? I mean, on that.
Yeah, I mean, of course. I mean, this has to come back down to the order block. Or it has to come back down towards the order block. Let me put it like that. It doesn't necessarily have to come into it. Let me see.
I was just asking if they bring the news out on the 16th. Well, that's what Wednesday.
That's on point, man. I mean, it's still going to press up.
Yeah,
They're going to, there are going to, I mean, FOMC meeting is going to happen, and the interest rates will likely raise.
That's 3 days. That's 3 days after the easy money though. So get those pips.
That's right below a daily order block though. So maybe it doesn't push in here. Maybe it respects this bullish order block. But if it doesn't, if this bullish order block is taken out, which it very well could be, then I would look at this imbalance right here. I'm not going to move the top of this box, but the imbalance would be right under this wick. From this wick to the bottom of this box, there's an imbalance. So this daily order block may very well get ran to fill this imbalance. Maybe they'll mitigate that imbalance before they take price to the top side.
If it just pushes into it, how many pips is that? If it respects the daily, that's still what?
Hey, Aaron. I think it's gonna run that daily, to tell you the truth.
Okay.
56 to the daily. 90 to the imbalance. 97, almost 100. I don't know. I mean, my personal feeling is that it'll probably run that daily.
Hey, Todd, real quick, can you jump back to the weekly on that?
Uh-huh.
So if you notice the red wick prior to the that big bullish candle,
Uh-huh.
if you fib that candle, that wick goes almost to the pip to the 38% on the fib. That may be something to look forward to.
The 38%
as a first.
as far as coming up.
That red wick, yeah, comes to the 38% on the green candle.
Right, but
that space, we know that space going to get filled.
I agree, that space is, but I trade at the 50.
Yeah, no, I'm familiar with your zone. I'm just suggesting that may be a good location for an initial take profit. To enter?
For a
yeah,
sell?
I was thinking about a yeah. Yes, it's right there. It's almost to the pit.
So here's what I would tell you. If you're trading this the way I would trade it, I'm not interested. I want to sell it all the way down. And here's why I say that. Selling it is a hedge to buy it. So I want to sell it until it stops. Then I want to enter for the buy. I mean, if that is here, if it stops and starts going up, yeah, I'll buy it. But I want to get everything out of this sale because I don't care about the sale profit, honestly. I care about my buy because that's where the money is going to come, right? I can close this sell out on the way back up. As it's starting to lose and my buy is starting to win, I can close the sell out. Does that make sense to you, Shell?
It does.
Let's say you sell with a $2 lot size, right? And a $2 lot size is a 0.20. And you're selling this down and it goes the entire 97 pips. So or let's say it goes 100 pips just for easy math. You have a $200 win here. And then it starts going back up and you buy it with a $2 lot size. Me personally, I'm gonna buy it with a $4 lot size if I bought it. If I sold it with a $2, I'm buying it with a $4. That's just me. As it starts going up and I'm losing on the $2 lot size, I'm winning on the $4 lot size. There's going to be a point once it breaks my personal entry level where I fibbed it or wherever I thought that I would get in this trade. Once it breaks that level, then I'm going to close my sell trade out and I'm just going to be in it for the buy to the top side. Does that make sense?
Yeah, it does.
That's how I trade. So to me, I wouldn't have a take profit per se on the sell trade on the way down because I'm only selling it to buy it back up. And do not confuse this for the easy money strategy. Okay, the easy money strategy is a strategy. This is the concept of selling this to the order block to buy it is totally different than the easy money strategy. I would use this as my easy money strategy because we have a few of them here this week that are going to do that. That's why I'm using this for my easy money strategy. Does that make sense, guys?
Yeah, I'm clear.
But the point was for me to drop down and like look for a valid reason or an area that the trade would likely move to for an entry, going up. And this is what I do when I take my various trade setups, and it works pretty well for me. I'm not going to say that I have the best possible entry in that trade, I don't necessarily worry about that. If I'm ever worried about, an entry in a trade, then I'll just enter a second position, and I'll get it on the 15-minute time frame once the trade is going in my direction. I think that makes more sense for me as a trader than worrying about trying to get a sniper entry on my initial entry. Especially since I hold a trade longer than most people will hold a trade. This wartime situation has made it more difficult for me to hold trades. As far as before the war, I was holding. I would hold several trades and they last all week, right? Since the war has started, I haven't had a trade that I've held the entire week. It's just not been as stable. Like this trade might go to the daily and pull back, come back to the weekly. Then it might go up again. So in that case, it's more beneficial just to take your profit at this daily. And then when it pushes back, you add another entry, and then it might push through the daily the second time around that week. But you guys have to manage your trades on your own. Like, I can't manage your trades for you. But if this is a daily order block and it's hit this level a few times, I expect this to push back down. You have to manage these trades the best way you see fit, right? You have to take your profit. I saw y'all had a conversation about taking partials and whatnot. Sometimes I do and sometimes I don't. It just depends on what the trade is giving me, right? So if I know that I have an order block on this weekly that's going to take me to this daily, I might take a partial here, depending on if I get rejection, right? If I get rejection, I'll take a partial, or I might close the trade out, right? And if it pushes back down, I'm not necessarily selling it down because I don't watch the charts like that. But if it hits this place again, I'll just add another entry and it pushes back to the top side. But to be perfectly honest with you, I wasn't on it like that until I really started trading with Terrence, because Terrence watches the charts more than I did. Most of the time, if I get into a trade, I'm not getting back, or I'm not looking back at it until the end of the next day when I get on, at the end of the day with my son and his group. But there is some benefit in chart watching if that's what you want to do. But I just don't chart watch like that. If you want to take your partial, set an alarm, take your partial at that level, and if you don't know how to do it, you can just go close trade and you can manually input the lot size that you want to close out. Okay. That's how you take a partial. You don't necessarily have to have 3 or 4 different entries. If you have a 0.20 lot size and the trade goes up here and you want to take a partial, you just go close trade 0.10 and you close half that trade out and the other half and let it run. You just move your stop loss to either entry or take profit, wherever you want to move it to. So if the trade comes back and hit it, then you either close out in total profit or you close out at entry, and then that'll be a 1-to-1 trade or whatever. Does that make sense?
Yes, it does. How do you use the extension tool on your line, your box that you were talking about?
What do you mean? Oh, the GAN box?
Oh, no, I thought you were saying like when you are pulling it over to the right, like if you find an OB and how you were pulling your line over to your box over to the right. I thought you had mentioned something about there was like a way to do that easier.
Well, you mean extend to the right?
Extend to the right, yeah.
Yeah, it's in I believe it's in settings.
Hey, Todd, wait, just highlight the box, then double click it.
Double click it, yeah.
Yeah. And then it'll come right, see it?
Extend to the right or
Right,
extend to the
extend left. Yeah.
Does that make sense? That way you don't have to drag it.
They want to.
So you make your box and then you double click it and then you do extend to the right and then it'll just go to the
Right, you
right.
can either double click or hit settings. Yeah, you hit
Okay.
extend to the right and it pushes this all the way over. I don't
Okay.
want my box to run infinitely, you know, I don't like
Oh, I
like
see. I
that.
see
But,
that.
if you want to do that, then it's available to you.
Okay, got it. Thank you.
So real quick, just a quick tip. If you're looking at, I mean, not, well, you could be trading the daily, the weekly, whatever, but even if you're trading, you know, your intraday and you're doing the 15-minute, 1 hour, you can use that tool to extend left. Like if you want to know, well, price just reversed. What did it reverse off of? You can start a box there, extend left, and then go look and see if it actually hit, right? If it's a legit reversal or it's just goofing around a little bit right before it continues to push in whichever direction. Does that make sense? So if you double click it and you hit where your reversal is, you build a box around it, you double click it, extend left, and you can go back into price and see what caused it to reverse, if that makes sense.
Yes,
As
that
far
does
as-
make sense.
yeah, as
Thank
far
you.
as the structure.
Right. Thank you.
All right, somebody wanted to talk about all US all. This is my brother's favorite trade right here. Anybody else trade oil? Especially as unsuccessfully.
I'm done with that oil, man. I'm done with it.
Oh my God. I don't like it either.
I told y'all Joe Biden was getting on the jets, traveling around, trying to get the price down.
Yeah, it drops $10 in like 2 minutes. I can't mess with it. It has imbalances to fill down here. Shay, are you on here?
Shay or shale?
What's that? Shay now, Shay now.
Oh, no. Sorry.
She got off here on us. I think price is going to fill this imbalance.
Todd, another quick tip you might find useful when you're blocking out your order blocks. So if you hit the control key, it will magnetize to the point that you want to start your corner. And then if you let go of it, you could free run it, right? It won't grab on to a specific wick or a candle, if that makes sense. So when you're marking out an order block, you can go, let's say, from a wick of the one candle to the left, and then go to the wick to the one candle of the right. It's hitting the control bar is the same as clicking that little magnet over to the left on your menu, and it makes charting up so much faster because you're not trying to fit, or want to get it close. It goes right to the spot, right to the button.
Okay.
Yeah.
I don't have to do that. Delete. Oh, where's my price? I know that was a long way to go to get where I think price is coming to, but there's an imbalance that it needs to fill. But I don't expect oil to be hanging out at this level too much longer. I think it'll fill this imbalance and at least go back up and eat the wick. So if you're trading oil, I think this is where your trade is gonna happen. I think it'll come down, hit the wick, and go back up to this order block. $18 swing. I don't think it'll all happen in one day, but I think that'll be the move next week. And then we'll get some, I guess, clarity on where oil is going to eventually settle. Hopefully it won't settle at $130 a barrel. That's for darn sure.
Yeah, I'm gonna have to trade the car in for a moped.
Yeah, hey, you have to trade everything in. But $8 a gallon, man. It's coming.
Yeah, I don't see any reason why these nitwads wouldn't jack it up to 150. It's just crazy.
Hello, Tesla.
It's still gonna be expensive. I mean, I'm with you, man. Everybody ain't sitting on that million, Sean.
It's an electric car, man.
I'm just saying, everybody ain't got that $1 million.
But everybody, you don't have to get a Tesla. There's other electric cars.
They all 100K.
Oh, are they?
What?
I don't think so.
No, you can get a
But now-
Tesla for less than 50 grand now to have like an
Can
economy.
you get a Tesla for 50 grand? Well, I don't know about
Yeah,
that.
they made a consumer, quote unquote, consumer friendly model.
Yeah, I don't know about y'all, but this
No, I know you can get Teslas for under 100K though. I mean, I don't know what they go for, but, and I know there are other ones that you can get for well under 100K.
Yeah, I think it's called the Model 3, Todd. The Tesla
Yeah,
Model
I'm not
3.
interested.
Yeah.
I'm not interested. I'm looking for that e-tron, baby. Man, why are they putting that crap? I want the e-tron. Todd, this.
What is an e-tron? I mean, who makes that?
It's an Audi, but it's 110K.
Well, you got that big money to it.
Yeah, I'm just saying. I thought you was gonna get you a new car, man. You can get matching e-tron.
If you go German, then go Benz.
'Cause if we was in Berlin, we would do that, but we ain't in Berlin.
Well, then why get Audi then?
Hey, because I don't have to pay that. I don't have to pay that Benz money for that Audi. Yeah. Thanks. Anybody have anything else they wanted to look at or they want to talk?
It's just, I do have something, but I don't know what it means. I just wanted you to comment on it.
What's that, sir?
Hold on, I'm pulling it up. There are several that look like this, but I'm thinking about, where is it at? Okay, like go to, there's several of them that look like this, so I'm not saying anything special about this one specifically, but Art Chef is one.
We'll come back to gold. Gold looks a lot like oil. It needs to eat that wick.
Art Chef on the weekly or NZD Chef on the weekly.
Well, that they're going up.
Yeah, well, all these weeks are going up, and then I see like on NZD
Some
Chef.
rejection. It's
Yeah.
got rejection. Yeah, I mean, it needs to pull back. Yeah. I definitely feel like
Like, fibbing the whole, would you fib the whole thing, or you just?
I would definitely fib the whole thing because it's going to pull back.
If you notice, there's a
Thank you.
weekly channel forming there too. Do you see it?
I don't trade
It's
channels.
clear as day. Now, I understand, but maybe some people do.
Yeah, maybe. Yeah, it is a channel through here, but more importantly, it hit the weekly OB. It tapped in. You want it at least to pull back 50. This might even pull back a little bit further than the 50. We might get that ICT joint, that 78.6 in this case. I think we would have to kind of drop down to refine the area. This is also a monthly order block that this is in, but it probably wouldn't be too hard. Let me see if I can drop down. Yeah, there's a daily order block in here. There's another daily down here. I would probably, I would think that this would probably go past this 50.
Go past the 50 on the way down?
Yeah. Just a little bit to the 78.6.
Man, that's a lot of pips.
Well, I mean, it is. But just choose your trades. Right? You're only going to take 2 trades, Terrence. Unless you.
I don't know enough to. I don't think I know enough to do this. It's complicated.
Well, it's not, man. It's you're trading it from this order block.
Okay.
It hits the order block. You just have to drop down and refine. On the daily level, there are a couple. Here's a daily order block that is going to react. It's not just going to come push straight down. It's going to bounce. But within your golden zone, there's an order block right here.
Okay.
I mean, you could probably trade it from pretty easily from where it is now to this order block, 175 pips, 180 pips. Okay, whatever. I like Euro NZD and Euro AUD a lot better than this pair, to tell you the truth. Just from the pip count,
Hold on, which one?
Man,
the one we were already doing, I guess.
It is. Look at this, man. That's 418 pips.
I got you.
This is the same. This is going to go back down here. I mean, it's the same trade. Same trade as Euro NZD right here. It's just going to push straight back down, and it's another 400 pips. Let's just trade it. Let me see from the order block down here to the bottom. Come on, Brett. No contest.
Right.
I mean, I'm not trying to discourage you from taking the.
I really really was just curious, and I wanted to know if you thought it was tradable or if I was just.
I definitely think that it's tradable. I definitely do. I just try to look at I try to look at the trades that have the best chance of reaching higher pip counts. That's all.
No, I agree. I agree. I agree 1,000%. I just like I said, I saw several of them this week, particularly that had several weeks of up and no pullback. And so I was just curious if that's
So
something.
maybe if you don't see a trade for your easy money, or if you want to do an easy money strategy, use one of those.
Nah, man, I'm doing
No. Oh my God.
No, I'm just saying I'm doing the ones we already marked up. I'm not gonna
Okay. Okay.
maybe if I get my account like yours, I'll deviate.
Hey, Todd.
Yes,
Right.
sir.
I appreciate you that was it Friday? No, it's Thursday. Those 3 trades, they hit. I had to retrace them back at 3:00 in the morning though, but they were all in profit though.
Yeah. I mean, man, it's not me, man. It's the order blocks, right? Like,
Yeah, that's true.
that stuff don't lie, man. That, like, the order block is going to tell you exactly where the trade is going.
Mm-hmm.
So all we have to do is look at it and take advantage of it, man. I mean,
Yeah.
and we can't get greedy. A lot of times we get greedy, and it costs us.
Yeah.
This trade got a lot of imbalance to clean up.
But would that be a beers one? Because the red candle in the gold, or let me see.
Well, yeah, this is a bearish order block.
Mm-hmm.
But, and here's another bearish order block. I'm just looking to where price is coming.
Mm-hmm.
Here's an imbalance. So price needs to come at least to this level, right? I don't see it coming all the way to 1900 to this order block, but it needs to push and mitigate this imbalance. It looked like it tapped it once, but this is it's actually far further than that. This is a pretty significant.
What it's reacting off of?
You see what?
I wonder what the price is reacting off of.
Well, it could be lower time frame order blocks, but this entire area needs to be mitigated, at least to the 50.
That wick that's already down on that red candle don't count as that.
No, remember, the way I trade this is it needs to at least go 50%.
Gotcha.
And I know there are different people that say different ways. Savannah and Smart Money Academy will tell you that it needs to be 100% mitigated. If you believe that, then I would suggest that you trade it that way. I was always told that it just needs to mitigate it 50%, and that would be right around here. You can put your GAN box on it, however you want to do it. I personally don't trade gold like that. I'm not a gold trader, but just by eyeballing this, I would think that price needs to hit this level, and then you can trade it back up. I hope that helps you, Martha. Again, like Demise trades gold. I know Ola Shun trades gold. There are a few people in the group that trade gold because they're pip chasers. But I live on the pairs more than anything else. But just looking at the imbalance and where price needs to come, I would look in that area to take it back up. Alicia Renee.
Yes.
Man, I ain't heard from you in like 2 weeks. You all right?
Yeah, I'm here. I've been real busy, but I'm here in and out.
That's what's up. I see you. You still got your paintbrush at work.
Yeah, always that don't fail me like Forex do sometimes.
Forex don't fail you. You know, Alicia, you don't want to top me half this stuff. So you failing yourself. Forex ain't failing. If you trading at the daily if you trading at the higher time frame order blocks, you're winning. You might take you a couple L's every now and then, but for the most part, you're winning. Hopefully, dang, Shell already left, man. Big Shay. All right. So, you know, hopefully I didn't mean to, hopefully I didn't offend him. I have to reach out to him. But you know, whenever I'm on the charts, you know, I don't focus on channels and trends and that sort of thing. I can only give it to you the way I see it and the way I understand it. And, you know, I don't believe in retail trading philosophies. You know, it didn't work for me. You know, I didn't get the consistency that I wanted. I put it that way. I'm not saying you can't find success, because I did find a level of success, but I don't believe that that you can find, or I didn't find the consistency that I was looking for in trading by trading channels and whatnot, right? But if that's what you do, I don't want to be the one to discourage you from doing that. You know, if you found success, that's awesome. Stick to it, you know, just be consistent with it. But if you've not found success, you know, there's a better way of trading that I can show you that will make you a successful trader, right? And it has nothing to do with the trend lines in the rest of the bull crap, you know, of retail trading, right? I think if you allow yourself to see order blocks and allow yourself to try to understand where price is going and why it's going that direction. If you understand market structure, if you see these lows getting higher, then you'll understand, hey man, the market is moving up. And then you go and search for the why behind why the market is moving up, right? If you start to understand those things, you'll give yourself a better chance of being successful. And if you don't rush into trades, right? Like I might be biased for this to pull back, or maybe I'm biased for it to go a little bit higher before it pulls back because I want to see a higher high. But I can't just rush into the trade because I'm biased for it to do something. I need to allow the trade to show me what direction it's going, right? So if I'm biased for this to push past this order block, I can't just throw a buy in here and hope that it goes with my bias. I have to have my bias and then look for the trade to give me the movement, right? So if I don't do that, if I'm not patient enough to allow this trade to develop, then I'm going to be in a world of hurt, you know, and I'm going to probably lose more trades than I should because I'm too anxious to take this trade and take it to the area that I think it is going, versus allow the trade to develop and go wherever it wants to go. I think that's probably why some people are still struggling.
I got my butt kicked this week.
Well, listen, I lost a trade too this week. That's par for the course. We're going to lose trades and all that stuff. That's going to happen. But what we can do is we can limit our losses, right? We can limit the percentages that we lose, and we can limit the amount we lose. All right. When I say limit the percentages, I mean the percentage of time that you lose, right? Because you're trading from, if I'm expecting this pullback to happen, you know, I might sell it down to buy it up. You know, I have a strategy, right? If I'm expecting this trade to keep going up. So let's say I expect this trade to keep going to the top side, right? And in this case, I do expect this trade to keep going to the top side, but I might want to sell this down before I take it up. But just because I'm selling it down to take it up doesn't mean I'm automatically buying once it gets to this area. I got to wait until I see a rejection, right? And the trade to start pushing to the upside before I enter my buy position. If I do that, I give myself a better chance at being successful, right? Versus losing more money just because I hop in here with a buy because it retraced to my golden zone here, right? Oh, it's a golden zone. This is my weekly retracement. I'm gonna hop in the trade for a buy. No, you can't do that. This is your area of emphasis. Once the trade gets to your level, now you need to drop down and get in the charts to start looking. All right. Doesn't mean you have to chart watch. Just means that right here, you right click, add an alert, and you can give yourself a message or whatever, look for a buy. And it'll make all kinds of noise. It'll send an alert to your phone or whatever you have, and this way you can start dropping down to the charts. Once the price gets to your area, and you can see what it's doing. Once price hits this order block, I need to see a rejection. Maybe I can drop down even further to the 15-minute. However you, as a trader, decide that you want to attack this, right? You guys need to come up with that, right? If you drop down to the 4-hour and there's no order block in your 4-hour time frame, there's an imbalance right here. Price, maybe it's coming down to mitigate this imbalance. All you have to do is refine until you get to a point that you're satisfied with. And you're watching for price to give you a reaction at that point. Once it gives you a reaction, you want to see it break structure. All right, break structure to the top side. What do I mean by breaking structure? Let's pretend that this little down leg is the down leg that comes in here and we get the move to the upside. If this down leg is the down leg that's bringing price into this area, the break of structure you're looking for is this right here. Boom, right? This move breaks structure right here. This will be your break of structure. Price pulls back. This is your entry. There's going to be an order block right here. On a higher time frame, this is going to be an order block. Probably like the 1 hour or maybe even the 30-minute. Well, it's not an order block like the way I teach it, but if you're in Savannah's course, this would be your order block. Of course, it wouldn't give her entry. Her entry is right here. But still, you see the break of structure. So all you'd have to do is drop down, into the 15-minute time frame. Even if it doesn't give you your order block here, it's going to eventually give you your bullish order block right there. There's your bullish order block. There's your entry. So you didn't get in down here. There's your entry right here. You can take that trade to the top side. Does that make sense? I know we're long in the tooth this morning.
Good, man. That all makes sense.
Well, hopefully everybody got
Right.
something. For sure. I'm gonna I gotta find a way to make these shorter. I really my hope is that somebody else will come and talk, and we can break these Zooms up. Everybody doesn't want to know how to swing trade, and I get it. But for those of you who do, you can take the same concepts that I use when I swing trade, and you can take them to intraday trading or scalping. But I'm not the best person to tell you, how to go about that, right? Because I don't scalp, and I very rarely intraday trade or trade off the 4-hour chart. So those of you who do that and do it well, hopefully y'all can come to the forefront, and you can give people a viable option, of how to trade these concepts on a lower time frame. Or even if you don't trade the way I trade, if you're successful trading the way you trade on a lower time frame, to me, it'll be a better benefit for somebody who actually does it to come on and give their breakdown. Next week, I might not even talk. I think that Gold Rush has a presentation, and maybe I can get a few people who trade the commodities and indices to talk. And for those of you who want to trade swing, for the time being, there's a 5 o'clock class that meets, or not class, but a group of us that meet at 5 o'clock every day, and we look at order blocks. All right. I don't necessarily lead that group. There are a couple of people that do more talking in that group right now, and which is a great thing, because it doesn't require me to do it. Those people that meet in that group understand what we're looking for. Okay. So if you want to swing, all you got to do is look at the candles at the close of the market. It'll give you your trade setups for the next day. You can get into those trades a lot of times right after the market closes. But if you're trading the European pair, sometimes you're not going to be able to get into them until in the middle of the night. But if you know how to drop down and refine your entries, you don't necessarily have to wake up to get your best entries. You can set you a limit order, and it'll pick you up that way. If you're setting a limit order, I would suggest that you give yourself a little bit of space, especially the first couple of times, just to make sure you get into the trade and don't get stopped out. You guys have any questions or anything else for me? All right, I appreciate y'all's time, and we'll see you throughout the week.
Bye.
Thank you.